Well, for more on finance, we are joined now by Henry Jennings, who is a senior market analyst with the stock market newsletter Marcus Today. Good morning.
Good morning, James.
It's been a pretty quiet couple of weeks here because of the public holidays, Anzac Day and Easter, but there have been some big tech results out of the United States. Who's reporting this week?
Well, we have got a big week in the US. We've got a big week in Europe as well. In the US this week, we got Microsoft, we've got Apple, we've got Amazon, we've got Meta as well. So it is going to be a big week. Plus, we've got some economic data out on Friday as well with non-farm payrolls. So we might see that volatility return. It has been, I guess, a little bit quieter. Of course, Donald Trump has been in the Vatican for the Pope's funeral, so we haven't seen quite so much activity from Mr. Trump over the weekend, which has been good. And we did see our market do pretty well yesterday, and it should do okay today. So it is going to be that interesting week. Overnight, we did see, I guess, something which piqued my interest in terms of the Texas manufacturing activity. They talked to business leaders there, and two of the words that cropped up a lot were chaos and insanity. And I think we can all identify with that so far since the Liberation Day, or in fact, since the 100 days now that we're approaching of the inauguration in the US. It has been somewhat chaotic, to say the least. So we're expecting a little bit more of that this week in terms of volatility.
Yeah, it's interesting to me, Henry. I mean, the election looms large here. It's getting a huge amount of media attention. The market just doesn't really seem to care and is sort of looking the other way, and is looking particularly at what China and the United States are doing. What's the latest? What can we expect over the next couple of weeks?
Well, it's funny, isn't it? Let's face it. I mean, the election is a massive issue, and we're very lucky to live in the democracy that we do. However, the market has really ignored it, I guess, mainly because perhaps it goes for so long, or at least it feels that it goes for so long, and maybe because the two parties are maybe closer together than they are in the US, with the Dems and the Republicans in the US. So we have ignored it, but it does have some implications, obviously, for the market. And China is looming large. They're talking about stimulus again, hinting at it, but maybe later in the year. And of course, you can't avoid the Donald Trump issue, neither locally or for overseas markets. So it is a bit of a non-event for markets. We haven't seen much of a reaction, and I suspect, when you look at the bookies' odds at the moment, it does appear that we are going to get a pretty close election, but Labour should scrape through, maybe in minority, which may not be such a bad thing, given minority governments in the past have been quite successful.
There you go. We don't have too long to wait. Henry Jennings, thanks for your time this morning.
Thanks very much, James.